Governor Jeff Landry is expected to announce more details about his plan to rework Louisiana's tax structure next week. One of the ideas being proposed would merge Louisiana's tax brackets into one flat rate, but some experts say that could increase the tax burden on lower income families.
In a legislative committee meeting late last week, Revenue Secretary Richard Nelson presented a tax reform plan that Governor Landry hopes to have approved in a special session.
I think if you have a competitive tax structure, Louisiana will grow. I think the population will grow.
Secretary Nelson says part of the problem with Louisiana's current tax structure is that it's simply outdated, complex, and not competitive with other states.
We, unfortunately, are located right next to Texas, right down the street from Florida. Tennessee's not too far away. All three of those states have no income tax. I think it's difficult to compete because even when you have, even a 3.5% or 3% personal income tax rate, it's tough to compete with zero.
Nelson says part of their goal is to make smart tax cuts without drastic revenue shortfalls. He believes a single flat rate could be a possible solution.
General in tax policy, the broader the base of the tax, the lower the rates. It's just better policy because everybody will pay something and it will be lower.
Today, people who earn up to $12,500 pay 1.85% in income tax. Others who earn between $12,500 and $50,000 pay 3.5%, and earners above $50,000 pay 4.25%. Secretary Nelson is proposing to combine three rates into one flat rate of around 3.5%. When property and sales tax are added in, some experts say lower income households ultimately pay a higher percentage of their income in taxes than wealthier households. I spoke with Dr. Stephen Procopio from PAR to get his thoughts on the flat rate as a solution. He says, provided that we get more data, it could benefit everyone, but there are still some concerns.
And so that would be simpler. And part of that is also would give everyone a tax cut. And some of the concern with that is by moving away from a graduated system, it would end up increasing taxes and being more regressive on those with lower income.
Much of the concern lies in the idea that many lower-income families may see increased taxes, causing more financial challenges in the home.
As I understand it and what's been presented so far, they are aware of this issue, and the way they're dealing with it is by tripling the standard deduction you take. So it would go from $4,500 to $12,500. So any income under $12,500 for an individual is not even taxed. And so that is a larger proportion of income for people that are poorer than for people that are richer. So that will help counteract, in theory.
To offset some of the potential cuts, Nelson has proposed taxing services, particularly online services that historically have not been taxed. That could include newer digital services like Netflix or Hulu, as well as certain luxury services.
So that's not even a thing that existed 30 years ago, not really. So a lot of that escapes taxation.
Right now, it seems like most lawmakers agree that Louisiana's tax structure needs work, but they want more details to ensure any changes wouldn't worsen the state's projected budget shortfall in the next fiscal year.